What's going on, guys? So, I just wanted to talk quickly about Tesla and some of the opportunities that might exist. Now, this stock has been on a run ever since kind of the crash in March, and it's been shooting up now to all-time highs, seeing $1,500–$1,600 a share. This is pretty crazy for a stock that, compared to some of the other stocks that are similar, it's on an insane run. So the only thing I could say is to, urge caution for those that want to buy and go long on this thing. Now, I'm not saying that I'm a short biased on by any means on this stock. I quite like Tesla. I like what they stand for. I like what they're trying to bring to the table in terms of their electric vehicles and kind of sustainable car manufacturing for the future. But the biggest thing is we need to kind of look at the bigger picture and not chase something just because we have FOMO. That fear kind of controls you sometimes, and you tend to make bad decisions. Now, if you were to look at this in the long run over the last 5 years, you'd say, man, I wish I would have bought way back then. This thing's just been going up and up and up ever since. And I agree. And don't get me wrong, I was talking about this thing years ago, like about 10 years ago. I was like, hey, you ever heard of Tesla? This new electric car manufacturer? They're looking pretty interesting. Yeah, how much of an idiot I am now when I could have bought way back like at $100 or something like that. I would have been like, whoa, But that's all in hindsight. Hindsight's 2020. The only thing we can do is look towards the future and to take certain perspectives to understand how we should make decisions. And that's what I just want to bring to you guys today is that, if you're thinking of trading Tesla, there's two options that I think are the better options at this point. But I'm not, giving advice, trading advice or anything like that. This is just my opinion. But I do think that there's a good opportunity in lithium because of the fact that all of Tesla's cars are powered by batteries that are typically lithium powered, and this provides big opportunities for companies like Lithium Americas Corp, LAC, stock ticker, and these stocks have been shooting up, as you can see, in tandem with Tesla, right? Over the past few months, as Tesla shot up, so has LAC, and you can see almost the exact same pattern, right? And it's because it follows Tesla. And this is how you can profit from stocks by not necessarily having $1,600 to buy one share. You can buy shares in companies like LAC and profit as both shares go up. Now, this is obviously a play for those that want to look into a lithium play or a silver play or a gold, because these precious metals are starting to see huge increase in demand because of the fact that we might be going into a recession. And that's why you see things like gold and silver reaching to all-time highs, because of the fact that so many of these COVID and all kinds of cases shooting out, everybody's feared. So many countries around the world are living in fear, and they're panicking again, as they have been doing ever since this pandemic broke out. And so you're seeing kind of the residual effect, because as the Fed kind of pumped more money into the economy, you saw the stock market not really dipping. It dipped huge back in March, and then it's kind of been coming back ever since, but we've never really seen the full effect of the recession and the kind of stock market crash that we will see. And we've kind of been seeing the opposite of that lately, and everybody says, oh well, maybe it's just going to keep going up, but more than likely we're going to see at least a dip over the next few months, and after that we might see kind of steady increases for a while, but there will be a dip. That's almost a guarantee. At this point, it's just a matter of where that dip is, what stocks are affected, and kind of what industries are going to be the most impacted. Obviously the airlines, the cruise lines, the Cineplexes, these close quarters places are being most heavily affected restaurants. That is sitting down, not necessarily fast food. They're probably doing really well, actually. But in any case, we want to think about our opportunities in these markets, and something like lithium is a pretty solid play for the long term as well, because as you know, things like electric car manufacturers need more batteries and need more kind of supply, these prices will do nothing but increase until obviously the demand for electric vehicles and electric batteries or lithium batteries are no more, which who knows when that will be. I'm not trying to say that's something you need to research on your own if you're going to be getting into lithium, but that's something that you want to consider, and you want to look at all these perspectives, and that's what I want to bring you when I talk about certain stocks. I don't want to just say, hey, here's Tesla, go buy Tesla, because they're amazing and they're a great company, and I'm not saying they're not, and they are, and I believe that what they're doing is very solid. And as they say here, I'll just kind of go over their mission statement real quick. Tesla's mission is to accelerate the world's transition to sustainable energy. Since our founding in 2003, Tesla has broken new barriers in developing high-performance automobiles that are not only the world's best and highest-selling pure electric vehicles with long range and absolutely no tailpipe emissions, but also the safest, highest-rated cars on the road in the world. Beyond the flagship Model S sedan and the Falcon Wing Door Model X sports utility vehicle, we also offer a smaller, simpler, and more affordable mid-size sedan, Model 3, which we expect will truly propel electric vehicles into the mainstream. In addition, with the opening of the Gigafactory and the acquisition of Solar City, Tesla now offers a full suite of energy products that incorporate solar, storage, and grid services. As the world's only fully integrated sustainable energy company, Tesla is at the vanguard of the world's inevitable shift towards a sustainable energy platform. And that's what I was saying about kind of their look towards the future, and the fact that they're trying to bring a more sustainable approach towards vehicles and energy use and overall kind of positive impact on the global environment and economy as these kind of businesses take off. But it's obviously a threat to gas and oil, and these kind of companies that are profiting from those industries are definitely in fear, but they shouldn't necessarily be, because as energy prices, as stock, oil reserves start to dwindle, you're going to have to shift to a new kind of renewable source of energy. It's just the inevitable, future that as it comes, but not necessarily going to be in the next 50 years or the next 100 years, but it will inevitably happen. So these companies, if they want to exist for the next 1,000 years or whatever, need to think about that eventually. I'm not saying it's today, I'm not saying it's tomorrow, but eventually they will have to think about sustainable future and trying to kind of move towards these kind of renewable sources of energy. Now, Tesla kind of puts out this impact report every year, just talks about kind of their global impact, the things they're doing to kind of lower emissions in the US and across the world, their kind of global footprint initiatives, and a lot of times a lot of this is just to show you kind of the positive impact they're doing in the world, and that their vehicles can achieve to kind of help sell vehicles, and also helps environmental kind of investors that want to invest in sustainable energy and invest in things that are going to help the world. They look at companies like this and they become investors. So they have talks here about their Gigafactory, which is a battery recycling factory in Nevada. It basically recycles their batteries so that they are 100% recycled. They do not go to landfills, and the small amount of post-consumer batteries that we receive are generated from our fleet of vehicles on the road, predominantly from taxi-like vehicles, since we have only been producing Model S for approximately 8 years. It will likely be some time before we start receiving back vehicle batteries in larger volumes. So, besides crashes or things like that, the only ones are from vehicles that are becoming obsolete, and so they're able to recycle these. But this is just showing you their kind of thought for the future. It's not just because one of the big concerns a long time ago was, what did they do with the batteries? Because people were saying that disposing of the batteries was actually more harmful to the environment than, say, gas or oil. But this was obviously coming from opponents and people that were trying to put down the electric vehicle industry. So that needs to be taken with a grain of salt. But the idea was that still these are kind of, batteries, and batteries are never a good thing to try and get rid of or dispose of, right? So they've created this gigafactory which helps to recycle their vehicles and batteries. So and they talk about how like their water usage per vehicle is kind of helping to reduce CO2 emissions. Obviously there are no CO2 emissions, but it says, while many recognize the impact that power generation has on CO2, its impact on water consumption is less appreciated. Power generation is one of the leading causes of water withdrawal in the U.S. So what they're talking about here is that every kilowatt of clean solar energy produced not only lowers CO2. So this is talking about their shift to solar power. So as they kind of promote solar power and look into these development of solar in their facilities and their and also in their vehicles, you can see a reduction in water usage. So that's kind of, the whole kind of shebang with them, is that it's all about reducing their global footprint, and going towards a more sustainable future through renewable energies. And obviously selling electric cars is their their bread and butter. So they're just showing you how they kind of get the best ratings across the industry, and they kind of are promoting sustainable future in different places, supporting different economies with these things like the opportunity for Tesla's solar roof to make a material impact on the reduction of U.S. residential carbon footprint is more substantial than generally appreciated. In many regions, solar roof costs less to install than a traditional roof combined with solar panels, while being aesthetically appealing at the same time. So with their new kind of solar infrastructure that they're trying to, and company that they're trying to promote, it's helping to keep them in line with their overall foundational principles of going towards more sustainable and renewable energies. And obviously they have a lot of support from millennials and kind of new age investors, and these are day traders. These are the ones that are kind of fueling the recent jump, and the recent interest in Tesla is definitely coming from this kind of segment of the investing population. But obviously there's a lot of long-term investors that are still investing in them, but it's just understanding that kind of it's definitely more millennial type of investment, and that is why you see this shift in, shift in kind of interest, and being kind of one of those things where a lot of times when companies are as overvalued, or as kind of stock prices getting to a point where it's kind of seen as overvalued because of the actual value that the company is generating in terms of profits, in terms of actual sales. It's just a matter of people believing in the future, or believing in what the potential is of the company, which is why the share prices go so high. And this is fueled by day traders and also millennial swing traders that see Tesla, want to hold it maybe long term, but see also the potential for kind of swing trades. And this is why it becomes such a highly volatile but also profitable company and stock. So that's why a company that's only trading, or only making 25 billion in sales, is able to shoot up to $1,500 a share, which in actual valuations is actually it would be highly overvalued. And when you look at their net income, it grew 56%, but it's still at negative 862 million. So they're still struggling to be actually profitable. But that doesn't mean that they're not growing and seeing very good sales and very good positive revenue. And this is why people are jumping on this stock, because it's the future and what it could be, not what it is today. And that's what investors need to realize, and that's what traders need to realize, and that's why we will see such volatility in the near future, is because of the fact that a lot of people think it's overvalued, but also there's a lot of interest and a lot of FOMO. So those that want to get in are still going to buy, but those that think it's overvalued are still going to short. And a guy that's on the short side would be this Tesla bear, Gordon Johnson, and he talks about why the company is running on borrowed time. So he talks about how the company is relying on regulatory tax credits, and that's what's keeping them afloat and what's allowing them to stay somewhat profitable. And Tesla is making a profit on tax credits, but the argument could be made that this is well known and merely part of the company's business strategy for the next few years. In response, Johnson said that Tesla's first quarter 10Q regulatory filing shows that the company said it recognizes revenue on the actual transfer of ownership. The massive increase in the tax credit revenue now looks like it was an exchange in revenue recognition, meaning the parties that bought the credit might not even own them, he said. The bulk of the credits Tesla sells goes to Fiat Chrysler Automobiles, and the newly formed entity with Puget will only pay $1.2 billion in tax credit revenue through 2023, the analyst said. The math implies that Tesla already pulled forward 60% in the first 6 months of 2020 alone, Johnson said. Tesla has only shown positive net income in 4 of the last 26 quarters when excluding the credits, he said. Tesla is already guided for a 48% drop in its tax credit revenue over the back half of 2020, and it will likely get worse in 2021. When people start to see that the growth is slowing, we think it becomes a real problem for Tesla. When we see that, we think it will become really evident in the third quarter. And that's what Gordon Johnson is saying, that as the growth starts to slow and as this kind of 48% drop in tax credits towards the back half of 2020, you're going to see the stock start to hit serious resistance, and you're going to see a lot of downward momentum, or at least a lot of negative impact on their revenues and on their kind of overall profits. And this is something that can go either way, because like I said, it's not necessarily that bad of thing that they are, getting credits for their electric vehicle. It is something that the government is trying to support and put money into, and this is why that their transition to solar is also getting them more tax credits, and they are getting a lot of support from the government, but they're also producing a lot of vehicles, and this revenue, like they're producing hundreds of thousands of vehicles, and that's not nothing, so the thing here is, and this is what this guy's talking about here, is that when you start to look at it from overall, it only makes sense when you kind of are thinking about it in an abstract way and what it could be, not what it is today. And he talks here kind of about how the share has just been going up, and how these CNBC personalities have been hyping it, and so the day traders and the kind of new age investors are just jumping on, and I don't even know if it is a stock. It is something else entirely, like a new species discovered in the wild. So prices are supported by the infusion of trillions of dollars of new money into the economy and by the steady growth of passive investing, in which money automatically flows into the 401k contributions and is put to work buying stocks, pushing prices higher. The potential inclusion of Tesla in this S&P 500 stock index adds upward pressure. And then he says here, narratives aside, there is little in the company's recent performance to justify such outsized enthusiasm. Although Tesla's sales have grown steadily, there has been no sudden acceleration. The company has repeatedly lowered prices. Tesla owes its sting of small quarterly profits to government credits and aggressive booking of prepaid orders for a full self-driving technology that does not yet exist. pay and bonuses for workers, not Musk, are being cut. So, as they talk about here in this article, and you can go check this out if you want yourself, Tesla's insane stock price makes sense in a market gone mad. It shows you how a lot of what's happening right now is insane, and it really is something that we need to be very, very cautious of. Now, don't take this as me saying that I don't believe in Tesla and I don't think that the stock is worth an investment, because that's not what I'm saying. If you're willing to buy this and hold it for the next 10 years, it could be worth buying at these levels. All I'm saying is hold on for a dip, because as these articles are pointing out, there has not been a huge acceleration in profits. There's not been a huge new technology that they've created, and there's been nothing to drive the kind of recent performance that the stock has had. So we need to really think about why would we be buying it at these levels when we can wait for a dip. But if you really do want to go long and you really are thinking, hey, I want to profit from kind of the upward momentum, think about trading options. And I don't even trade options, and I'm not an options trader, but I do understand how they work, and being able to gain leverage and kind of, when the stock goes up 10%, you get a lot more profits when you are trading options than if you're trading pure stock. And that's one of the things that I think a lot of people are kind of starting to realize when they're traders, is that there's different ways to trade. You don't necessarily have to buy stock of the company. You can buy options in the company, and that allows you to kind of profit from these small moves much more than if you were to just buy the stock itself. So that's just a thought and kind of where I wanted to leave this video. So as I said, look into lithium. If you're really thinking about Tesla, start looking into lithium. Think about getting into some of these names, or just research them, put them on your radar. And as I said before, the stock chart generally mimics that of Tesla, and if it's trading at 662 and Tesla's trading at $1,700, which one do you think you could see the most potential upside in the next 6 months? That's a question you need to ask yourself, and that's how any good investor looks at the market and doesn't become biased on a company just because they like the company. And I do like Tesla. I do like everything that they're doing. I like the company. I like Elon Musk to a degree. Everything, obviously, like I'm not in love with everything that they do, but I do think that it's good for the company, good for the world, and it is going to be a good company in the future. So with that said, thank you for watching. Check out some of my other videos. Let me know what you guys think about Tesla. If you guys think it's going to go up through the roof to 2,000, or if you think it's going to shoot back down to maybe 1,000 and come back down to earth. And anybody that's made money, let me know how much you made, and let me know what you guys think. But yeah, like I said, trade options, buy lithium. If you want to go into this stock, maybe look at swing trading, and just be careful, be cautious, wait, buy the dip, and don't fall victim to FOMO. Thanks guys, have a great day.